What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button if you haven't already, hit that subscribe and notification button as well. That way you are alerted to when we release new videos. We do release bonus content from time to time. Now the nightly and weekend videos, like tonight's video, we focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings or leap trades. So if you want like a deeper dive into exactly how we set our charts up with the broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page. Got a couple of videos that dive deeper into that for you. So I do encourage you to watch this full video. We do go over triggers and targets on shorter time frames, but we do on larger time frames as well. So we give some pretty good insight all around. So let's take a look at the agenda for today's video. First, we will recap the price action from today, Thursday, March 5th, before we zoom out like we always do and take a look at the week, month, quarter, and year price action, just to make sure we're level set and not too zoomed in. Then we will take a look at the market maker's expected move for Friday, March 6th, before we zoom back in and set what we call the 4-hour markers and our triggers and targets for Friday, March 6th. And we'll also do a quick review of the triggers and targets for the week, month, quarter, and year as well. All right. So let's just go to the 5-minute chart like we always do to start things out. This is how we can take advantage of the proven and repeatable strategy that we use to either get into early scalps in the morning or just early entries into longer day trades, right? And that strategy is quite simple, right? We look for higher lows at or above opening print to get into calls, targeting previous high a day and overnight high as those the targets there. And then if we get lower highs at or below opening print, then we want to look to get into puts, targeting previous low a day and overnight low. So today, and there is some nuance that you want to throw in there once you get to working with them. But to just start out with the basics, you know, like we said, higher lows at or above opening print, look for calls, lower highs at or below opening print, look for puts. So today was one of those days we had to use the nuance, right? We opened up and pushed down, and technically we made a 2 down, a lower low in comparison to the last low in Wednesday's price action, right? So this is the last low of Wednesday's price action. So let's go ahead and just put it back to, just today's price action, Thursday. If we can get the chart to act right. Come on, there we go. So we made a lower low, but then we popped back up and we made a higher high. So a broadening formation was formed on the 5-minute, right? So we'll just draw it in for illustration purposes, right? So there's our broadening formation. We dropped back down. We made yet another lower low, so went below this low, but essentially got the bounce. Now you can see this gray line coming through here diagonally. That is a 4-hour broadening formation, the bottom part of a broadening formation. And then you also have that support of overnight low and opening print right here. All right, so we did wick down, make a lower low, but did find support off of opening print and overnight low, as well as this broadening formation. And we bounced back up again, and we ran up into, an even thicker wall of resistance, right? So we had a nice, decent support here. But here we have a bunch of levels of resistance, right? Previous high a day. This light blue line coming through here diagonally is the 15-minute broadening formation. This purple line is a weekly broadening formation. This blue dashed line coming down here diagonally to the right, that's the 1-hour downtrend line. And this gray dashed line here is the 4-hour downtrend line, right? So as you can see, we pushed back down. We made a higher low, right? So this was a good chance for people to go long, but again, we've got all this resistance here, and if we just look over here to the left, you can see, right, that's where yesterday topped out as well, right up here. Okay, and I'll just do it. I don't usually normally do this, but if we take a look at the overnight session, oops, that's today. Come on, Thinkorswim. If we look at the overnight session, what is going on? Come on. Thinkorswim, work with me here. If we look at the overnight session, come on, bring it in. That's essentially where we peaked in the overnight session as well, right? Overnight high was up just barely higher, but that's essentially where things peaked out. So we avoided getting into any calls at that time and simply looked for the lower high. I also want to call out the internals for QQQ. So if we switch over here, where's our other charts? There we go. Bring this over. All right, we can see that the tick was started out in trend lower zone and was below zero. Even when it ran up to the zero line, it just was rejected by zero line and went back down to trend lower zone. Vol QD, volume money going in versus money going out, slightly green at open, but then pushed down, and then you can see by 10:30, 10:45, we're getting those lower highs, and that's where we got that big dropout. Same with ADQD or breadth, right? Started out in trend lower zone, was pushing higher, but still very handily in negative territory, right? Before, again, at around 9 o'clock, started to push back down, and then at 9:45, 10 o'clock, when we saw the big drop on the price charts, that's where we got the drop in breadth as well, right? So back not only hitting trend lower zone, but going deep into trend lower zone, right? So those were all reasons why we were opposed to the calls this morning, and basically just waited for the lower highs and jumped in on those puts. Now it was a little bit tricky because we got this lower high here. We went ahead and jumped in puts once we dropped below the low of this 2 up, right? Locking in this as a lower high, right? So we entered right here. We pushed down. We got this soft lower high, lower low, lower low, lower high. But then we got this higher high. Higher low and then higher high, just barely. But it was still within this this bearish engulfing candle right on this support level, right? And we knew that we still have all this resistance above. The internals were still pushing down. So we just basically hung tight, right? If we go to the 15-minute, there was nothing. Come on, Thinkorswim. There we go. If we look at the 15-minute, there we go. We were making lower high and then lower high, right? So before we dropped out. So that was another reason why we decided to stay in those puts as well, and that ended up, rewarding us. We did get down below opening print, and once we dropped below opening print, we dropped pretty hard, right? Went right through that 4-hour broadening formation, right through previous low a day, right through market makers expected move low, and came all the way down here to this 138.2 fib extension. We'll activate that. That is that fib extension from the April 7th low, and that's where we caught our support, right? And if not only but that 5076 has been a major support level as well, right? You can see back here this past Tuesday it was support, and let's actually just bring up a better time frame. Let's go to the 1 hour, right? You can see it was the major support over here a couple weeks ago as well. So looks like the extreme bottom of the range. If we're looking at ranges, we can kind of say that there's a micro range inside of the larger range, right? So this would really be like our micro range, right? So you can see most of the trading was going on there. We have the look above and fail, look above and fail, look below and fail, back into it, look above and fail. Then, of course, all trading with this in zone, and then look above and fail, and now we're dropped out. And it's looking more like, instead of look below and fail back up into the range, looks like we're getting this lower high here to confirm no longer trading in this range and dropping down into this, larger trading range that we've been in for a few weeks here. If we scrunch things up here a little bit, I've reached my max there. Let's go to the 4 hour. Yeah, there we go. So you can see this is the beginning of the year over here, and let's just activate. And we can see this has just been the larger trading range all year, right? So since the beginning of the year, when we popped above that 5076, that major level that was support for us so far this year, that was a major level of resistance going into last year, right? So that 5076, we found a good bounce there intraday. But what continues to happen from here, we've got to wait and see. Come on, Thinkorswim. Let's get this back right. All right, so let's remove that. So we did get that drop. We did actually have a target sell set up at that 138.2 fib extension. So even though we went through it, we didn't get the exact bottom, but we sold a majority of our position at this this level, and then we just basically watched it move sideways until we got this higher low into the higher high. At that point, there's no real reason to try and scratch out any more pennies. We got the major move, and we're sitting at a level of support. So from just a levels perspective, this would be a great level to see a bounce. And you can see we got the higher low, higher high, higher low, about equal high, but then we kept the higher lows, and then finally at the end of the day we ended up pushing up. So I'm glad we ended up getting rid of the rest of our position here with this higher high, and we just kind of watched things. We didn't get in any of the upside action today. Didn't know how much momentum would really build. It was the end of the day, the last hour. We just wanted to not to put too much more risk on the table, right? It's not like we were going to swing anything over the week, or I'm sorry, over the night. So just kind of watched from there and see, is this going to be that lower high on the 15 or the 1 hour? Oops, there we go. Let's bring up this 15. Let's go to a better chart. All right, so on the 15, I'm sorry, not the 15, the hour. There we go. On the 1 hour, right, we're working with kind of a funny situation, right? This is a range in and of its own. We had this high and then the soft higher low, but then this lower high before making another higher high. So, right as of right now, we're in the broadening formation, right? If we draw, let's get the right tool out here. If we go from high to high, if we go from low to low, right? We're in this broadening formation here, trying to push back up to the top side, right? Obviously, we've got this gap from 2 days ago that can act as a magnet for us, but we do have this daily downtrend line and two 4-hour downtrend lines that we've got to try and break through. So will this end up being a lower high on the 1 hour? Say we open up and push down tomorrow in that first 4-hour candle, then we've got this hourly downtrend line that forms right here to accompany the 4 hours. So not out of the woods yet with this bounce, right? We're still just in this micro range at the bottom of a larger range. So, plenty of resistance above, but a lot of support below as well. So maybe, the best play is to just wait until we resolve this level, right? If we push up, make something up a higher low, and then push up into a higher high, maybe that's our signal to go, go long. Otherwise, we've got to look out for this lower high and that push lower, right? And the reason why we bring that up, mostly because of the 1 week and month charts, but we'll get to those in a second. On the 4 hour, like we were talking about on the 4 hour, right, we do have this lower, lower high here as well before making this barely lower low. So we do have this downtrend, technically a downtrend on the day as well, right? So just want to keep an eye out on what's going to happen here, and really just be patient for the decision by the market to tell us which way to go, right? If you're good at getting in there on those scalps, really small time frames, 1 minute, 3 minute, 5 minute, 15 minute, keep working it, right? That's all the more power to you. But for those of us who are more trend traders and like to play more the 1 hour, 4 hour and up, just got to be a little patient here. There's plenty of move to be made. Look at this from highs to lows, right? There's plenty of money to be made in those moves. And if this does end up being some type of double top, then right there's this much distance that we have to the downside to capitalize on. So no need to be the first one in. No need to be the last one out as well either, right? If you're getting into a move that has enough magnitude, getting a majority of the move is just fine. You don't need to be the first one in, last one out, right? That can be a lot of times how you end up holding the bag. So, just continue to be patient. Let's look at the 1 day chart. We did kind of talk about how we're in a downtrend on the 1 day. So we did. Let's make this a little bigger for those on phone. I don't know. I think something's doing this to me today. There we go. My goodness. Work with me. There we go. So we did get the high yesterday, locking in that lower low. but then we went 2 down today, so that just locked in yesterday and as a lower high. So we're in this downtrend, kind of moving sideways again at the bottom of this range. So just continue to be patient. The week is one thing that we really want to look at here, because we want to avoid going lower low, just because that would take us out of the uptrend, right? It wouldn't put us in a downtrend, but it would put us in a broadening formation, right? You can see this. Let's activate this right here because it's a little hard to see. You can see this high to higher high. That broadening, weekly broadening formation is right there, that purple one. Well, if we go lower low here, then we're just, making a low to a lower low, and we've got this, broadening formation that we're in. So bulls want to avoid making that lower low. It's not putting us in a downtrend, but it's going to technically take us out of the uptrend and put us in a broadening formation. And we'll just have to basically wait a little bit longer for a direction to get chosen. So not the end of the world, but if you're a bull, you don't necessarily want to see that. But we talked about this from Friday's video, or I'm sorry, the weekend video last week. There was a very good opportunity for this 2 up combo 2 down to take place, and the magnitude of that move is down here at 49.33. So we have almost made it all the way down there, but we'll see what happens. Right now on the month, the reason why we want to be aware of the month is because there is a very good possibility that we could trigger this one combo 2 up 2 down that then would take us down to 28, right? So first step would be going 2 up 2 down on the month, which we're kind of close to doing, and we're only in the first week of the month. So there's a lot of time left that if we go 2 down, that triggers this 2 up 2 down, magnitude of that move being the low of the candle to the left of the 2 up, which is down here at the $45 level, which is right above that gap, right? So that gap could still act as a magnet to us. If we do complete that strat and go into that gap, then that triggers this one combo 2 up 2 down, and that takes us all the way down to 28, or at least the magnitude of that strat would take us down to that level. Whether we reach that level or not remains to be seen. It's not like we're in a downtrend. It's not like we have full time frame continuity to the downside, although if we do trigger that would actually flip us full time frame continuity to the downside. But from like the monthly perspective, we've made this higher low and a higher high, so technically we're in an uptrend. So if we were to go down, there is a possibility we reach that magnitude, but there is also a possibility that we're just making a higher low, and after we fill this gap, maybe we bounce, or maybe we push down a little bit further, hit the 61.8 fib extension of this bull flag from the April 7th low. I'll just activate this for anybody who's not familiar with it, right? This is the April 7th low. We went up on the daily and weekly time frame. This was a bull flag, right? Here was the flag pull. Then for 3-4 weeks we went sideways for the flag, then we broke out of that, and you can see obviously we've hit some of those markers. But again, even if we do trigger that 2 up 2 down, and we go into that gap to trigger the one combo 2 up 2 down, it's not necessarily the end of the world if we can still pull off a higher low. All right. On the quarter, not a lot to talk about here, especially if you're familiar with the channel. We ran the one combo 2 down, combo 2 up strat to the 70.08 magnitude, and we can see we're getting some pullback here, but we went from lower low on the quarter to higher high, so we are in a broadening formation on the quarter. It remains to be seen how much further we can expand it to the upside, but as right now, nothing really to worry about on the quarter time frame. Pretty much the same thing for the year. If we look at that, here we triggered this, last year was a 2 down, so this year we went 2 up, triggering this 2 down 2 up, magnitude being 70.08. We reached magnitude and we've got the pullback. So we are on the year coming from a higher low, and we have made a higher high to this candle, but technically we do need to get up to this the higher high, or all-time high at 74.21 to really make this an uptrend. So again, nothing to worry about from the year time frame, but just keep an eye on those smaller time frames to see what will set up on the quarter and the year. Right. So that's everything we've got from the zoomed out perspective. Let's take a look here at the market maker's expected move for let's go to the right chart there for Friday, March 6th. And to do that, did we get the right chart here? Let's go to this one. Yeah, there we go. To do that, let's go to the 1 hour, and then we will bring up our options chain. There we go. So for March 6th, here's the options chain, and this is Thinkorswim. If you go to the right, there is a number plus or minus in parentheses. This is plus or minus 3.788. I think we just did 3.78. Yeah, we just did 3.78. So technically 3.79, but we did 3.78. So this is the market makers expect a plus or minus 3.788 move. $7. Let me get my mouth working right. The market makers are expecting either plus or minus $3.79 approximately of price movement, right? So the closing price was 54.80, meaning that the market makers expect price to be in between 58.58 and 51.02. Right now, if you don't have the market makers expected move here in parentheses, if you're not using Thinkorswim, you can add up the at the money straddle with the in the money strangle, and then divide it by 2, and that will give you your market maker's expected move. But real easily way, a lot of I would think a lot of platforms would have that here. I've only used Thinkorswim for the past decade plus, so I'm not really sure. I should probably look into that, but very easy way on Thinkorswim to find it. Otherwise, just add the at the money strangle to the in the money. At the money straddle to in the money strangle, and divide by 2, and that's how you get your market maker's expected move. So if we go back to the chart here, we can see we've just put that out here, and the reason why we put that on the chart is to kind of get a gauge as to what might happen for tomorrow, right? So we got the market maker's expected move here up 58.58, and the market maker's expected move low at 51.02. So that would mean we would just, if we hit the market maker's expected move low, we would just barely take the 2 down, basically go 2 down on the day chart, right below previous low a day. But the market maker's expected move high would have us going 2 up on the day if we were to go to the upside. Now, if we go 3 on the day and an engulfing candle, whether bearish or bullish, that is a possibility according to the market makers, right? So do have this gap above from 2 days ago that could act as a magnet. We've got the week and the month flip here as well on at 58.15. So if we get back above that 58.15, that does put the week, month, quarter, and year all green again. Right now it's just the quarter and year that are green. So just keep a lookout for that, and you can see obviously that 50.76 still holding up as a major support level. Market makers don't have a price going down below that. Excuse me. So that's what we've got for the market makers expected move for Friday. It's March 6th. Okay, let's go ahead and zoom back in at this point and talk about how we will attack tomorrow, specifically tomorrow morning at open, and talk about the four hour markers and the triggers and targets for Friday, March 6th. All right, so currently we have, let's get everything on here. Okay, so we've got previous low day down here as far as the 4 hour markers are concerned. We have previous low day, overnight low, overnight high, and previous high day. All right, so the overnight high and overnight low, our current overnight high, overnight low, seems to be that we're pushing up a bit here in overnight. So just for illustration purposes, we'll say overnight high gets up to, it gets all the way up to this 161.8 fib extension of that April 7 low bull flag, which also coincides with this 1 hour downtrend line as well, right? So we'll just say price gets up there and we open somewhere in between. Let's get the right tool out here, and let's say price opens here, right? So for the proven and repeatable strategy, it's very simple. We're looking for higher lows at or above opening print, or this first traded price of the day, and we want to look to target overnight high and previous high day if we're getting into calls, right? So if we get open here, we get some type of higher low, right? So if we open, we push up maybe to overnight high and get rejected by overnight high to pull back, only to make this some higher low at or above opening print. We want to look to get into calls looking for overnight high and previous high day. If we're open here and we push down, maybe bounce off an overnight low and push back up before we get some type of lower high at or below opening print, that's when we want to look to get into puts, targeting overnight low and then previous low a day. All right, so that is the proven and repeatable strategy for early morning scalps or early entries into longer day trades. If we zoom out here a little bit further here to the 4 hour time frame and take a look at things, we do have a 3-1 from Thursday. So an outside candle and then an inside candle. So big indecision and then little indecision. From looking from a strictly strat perspective, there's very little, if any, downside magnitude, right? So if we were to go 3-1 and then that first 4-hour candle of Friday's price action, if we go 2 down, that would trigger 3-1, 2 down on the strat. Now the entry would be the low of the 1, which is 51.27, but the exit would be the low of the 3, which is not too far below at 51.13. So not a lot of magnitude there. However, you would be continuing that downtrend on the 4-hour and the 1 day at that point, right? So you can look at that from that perspective. Again, going back to just strictly looking at the strat, if we go to the upside, if we go 2 up in that first 4-hour candle, we get this 3-1-2 up, triggering at the high of the 1 and exiting at the high of the 3. And we do have that gap above that could be, a little incentive to leave some runners out there. But you can see today we ran right up to that gap and then rejected off of it. So there's a possibility of that happening too. So just if you do leave a runner, keep a tight leash on it. Don't give a lot of that profit back that you got from that move, right? That's what we're looking at from the 4-hour. But again, remember, we got this 1-day downtrend line here in the orange, and then we've got 2 4-hour downtrend lines, right? The first 4 hours from early on at that peak. Really, we could kind of take that out of there. It basically lines up with the 1-day downtrend line. I'll go ahead and remove it. But we've got this lower high to lower high downtrend line right here as well. So keep that in mind. Switching to the day, let's get a little cleaner chart here. On the day, again, we made that lower high and then a lower low. So technically we are in a downtrend. So if we go 2 down tomorrow, there's no strat reversal or magnitude to be had, right? It's in a continuation at that point at 2 down, 2 down. So we're just looking at the these extended targets that we have right here. Last month's low, 49.33. This is going to be a major target. The gap close here that we have a very small gap still left from back in early January at the $48 level, almost 48 flat. And then we've got that 46.79 level as well, right? It acted as major resistance in 2025 and it so far has been the breakout point of 2026. All right, so those are your levels to the downside where you could catch support. Now if we go 2 down, 2 up tomorrow, there's really no magnitude there, right? We got within a cent. I think it was 57.69 was today's high. Yesterday's high was 57.72. So $3 of magnitude, or 3 cents of magnitude. Now again, that would complete the strat, but you do have the small gap right here from a couple of days ago as well. It could act as a little bit more of a magnet, but again, from a strat perspective, that would fulfill that strat. It's not like we would have this combo 2 down, 2 up that's really going. I guess you could say it would be, but the magnitude of that move is way up here, and I highly doubt that would happen tomorrow unless we get some major catalyst to push us up to that level. So that's how things look from the scalping, the 4-hour, the 1-day perspective. Let's go ahead and go to the notes here. We've been looking at the charts quite a bit and just kind of get to wrapping things up here. So for Friday, March 6th, there will be 208 trading days left in 2026, and we know the close price on Thursday, March 5th was 58.40. We know that the week and month are red, and in order for them to turn green, they've got to reach that 58.15 level. But we do know that the quarter and year are green, and for them to go red, we'd have to get all the way down to this $45 level. So pretty much in between there, a little bit closer to flipping the week and the month green to put us back in a full time frame continuity. We know that the market makers expected only $8.86 of movement plus or minus from the close price on Friday with a lower level of 53.91, but we know we poked through that today already. We did close back above it, but there is a good chance that tomorrow we do close below what market makers expected the move to be for the full week, and that's because we have this $3.78 plus or minus expected move for tomorrow that could bring us down to 51.02. Again, these are not end-all be-all levels. It doesn't mean price has to bounce from these levels. We could easily go through this 51.02 as well to the downside if we have the right catalyst. So just keep that in mind. Speaking of the gaps, we showed it on the chart, but we do have that gap from a couple of days ago still left to the top side, and then we've got multiple gaps to the downside. So just keep those in mind as they do act as magnets for price action. We talked about on the scalping perspective, we did want to look for higher lows at or above opening print to get into calls, looking for overnight high and previous high a day. If we get price action to the downside, then we want to look for lower highs at or below opening print, looking for overnight low and previous low a day. We talked about on the 4-hour chart, there's not a lot of room, not a lot of magnitude for the downside move. Looking at strictly the strat, right? 312 down would trigger at 51.27 and at 51.13. If we do go to the downside though and reach magnitude, there's a good chance that we would reach the extended targets that we have there for you, 49.33 being last month's low, and then 48.09 being the gap close. If we go to the upside, more magnitude there for just the strat move, triggering at 54.82, and the magnitude of 57.69. Now we are in a downtrend, so it is possible that we reach magnitude, but it's also possible that we hit one of these other points of inflection in between the trigger and the magnitude, and either go sideways or push back down to the downside. Now, if we do reach magnitude and we're still pushing with some momentum, we do have that gap close up there at 58.05. So it is a real possibility still as well. On the day chart, we talked about we would have a two down continuation triggering at 51.13, and we'd have the extended targets out here again. Last month's low, the gap close, major support for 2026, and the major resistance of 2027. And then 45.13 is the opening of another gap as well. No, that's just a lower low. I apologize. But yeah, it's a pretty long stretch to get to 45. Not that much with SOXL, frankly, especially with the movements we've seen this week. So we do want to leave that out there. On the day chart, though, if we go to the upside, that does trigger the 2 down, 2 up at 57.69. Only 3 cents of magnitude there at 57.72. So you'd want to look for follow through at that point. 58.50 is the market maker's expected move high. We got 59.41, 60.85, 62.08 as your extended targets, and the magnitude of the larger 2 down combo 2 up. I apologize, I didn't put that in there. Combo 2 up. Right, that is the magnitude of that move would take you all the way up to 62.82. Right. We talked about on the week, we have triggered the 1, 2 up, 2 down, but at 60.66, but we did reach magnitude at 50.29, which then triggered this combo 2 up, 2 down, which brought us down to one of the intermediate targets or inflection points, almost to that magnitude of that move. So 49.33 would be the magnitude of that move, and we are well on our way to doing that. But one more day to see. Can we fall that extra, $5 at this point to get down to that? We'll see. If we do have a bad day, and reach that 49.33 again, we've got those extended targets out there for you. 46.79 being that major support, right? If we were to go green 3 on the week, we've got to get all the way up to 72.36. I think it's safe to say that's not going to happen tomorrow. On the month, we're still an inside month, right? We've got to go get down to 49.33 before we trigger that 2 up, 2 down on the month. If we do trigger that 2 up, 2 down, the magnitude of that move is 45.08, which would then, if we reach that 45.08, it's the top of a gap. If we get into that gap right below 45.08, that then does trigger the 1 combo 2 up, 2 down on the month, which has a magnitude all the way down there at 28.12. So just be aware of that. If we end up pushing back up, again, it's only the first week of the month. So if we end up pushing back up and end up going 2 up on the month, we've got to get up to 72.36 to do that. So we'll talk about it a little bit more if we get closer to that. And then just to wrap things up, we know we ran the strat on the quarter, we ran the strat on the year, so not a lot else for us to look for there in terms of those, looking for a strat on those time frames. It's the month and below that we've got to pay attention to it at this point, and just play that volatility. So that is it. Those are your triggers and targets for everything ranging from the scalping perspective all the way up through the 1 year chart. We tried to jam in as much information as possible without taking up too much of your time. So we do hope you enjoyed today's video. If you made it this far in the video, a thumbs up goes a long way. We do appreciate those who continue to tune in and those who continue to leave comments and give us a thumbs up. It does mean a lot to us. It helps the community grow. It helps to let us know that we're doing something right out there. And that's the main goal, is just to help as many people out there as we can, make trading a little bit easier, right? We don't charge anything. We don't have membership fees or anything like that. So we feel a free thumbs up would go a long way for the daily video, daily videos that we continue to put out. So thumbs up goes a long way, but we'll go ahead and wrap up the video here. We do appreciate you for watching. If you're watching this Thursday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Friday morning or Friday during the day, we hope you got some good rest last night and woke up refreshed. And we look forward to getting out there and trading with you.